Silver declines after central bank announcement. This is upside down. Let's start. According to James Hirix, silver prices forecast is silver poised for correction amid divergence from gold. That word divergence is really an understatement. We've been so excited about gold bumping up, and we've been waiting patiently, waiting for silver to make its move. This article states, silver prices experienced a notable decline last week, ending a 3-week rally, contrasting with gold's robust performance and record highs. Certainly robust. This divergence highlights silver's unique market position, distinct from gold, cryptocurrencies, and also equities. It says that despite central bank buying strongly supporting gold, silver has not yet enjoyed demand. And we've heard a lot about silver demand and its impact on price lately. It says, however, it closed the week lower as the U.S. dollar firmed. A stronger dollar makes silver costlier for holders of other currencies. And this is really interesting because we forget here in the States that people from other countries with other currencies are also going in on silver here. And if their currency is weaker than the dollar, that they're going to pull out, right? Like it's a more risky investment for them. Really, the most positive news we see for silver coming this week actually comes from Goldman Sachs. And this really is shocking. That this is an article by Bill Bullington, and it says, Goldman eyes 15% commodity surge on rate cuts. 15% commodity surge. In regular English, they're seeing that by the end of this year, with these 3 rate cuts, we can see a 15% profit from silver. So if you do that math, if we're following Goldman's advice, and by the way, whenever I mention Goldman Sachs or any of these banking firms, I mean, every time I mention it, I'm shocked that we still look to these banking firms as if they are trustworthy sources. I mean, if you or I were caught lying and stealing as many times as these banking firms have been caught, no one would ever listen to our opinion. We would be considered thieves, but here we are turning to the wisdom of these banking firms once again. Even, in fact, look, even doing a quick Google search on Goldman, the first thing that comes up is it says, Goldman was criticized for allegedly misleading its investors and profiting from the collapse of the mortgage market during the 2007-2008 crisis. It says, the list led to investigations from Congress, from the Department of Justice, and a lawsuit from the Securities and Exchange Commission that resulted in Goldman paying $550 million. If a regular person, you or I, had to pay that much of a fine for something we did, no one would ever look at our opinion as trustworthy. But that's where we are. I mean, that's how we see this. Okay, so let's keep going. It says 15% return, which, by the way, that means on a two. Let me do this math quick. On a tube of silver, let's say like $25. Let's say silver is going to level out at $25. A tube of silver. That means by the end of the year, if we're buying a tube of silver now, we should see a $75 increase on that tube of silver. So I like that. Hey, Goldman, I take back what I just said. I like that. I'll take a $75 increase because I am still a true stacker. Even with this stagnant price, I'm still going in. This is a nice 2-ounce round. I love these 2-ounce rounds here. This is the same, but it's got the Walking Liberty design. These are so cool. This one I'm showing right now comes with a real premium. This isn't like stacking silver, right? It's not just silver rounds or silver bars, but I absolutely love these and I love showing them off. You can really see the difference. I mean, it actually, really tell you the truth, I do love, this is from the Intaglio Mint. I do love these, but the image is a little flat compared to these reverse proofs that totally pop. Anyway, so yeah, if we're seeing silver leveling out at $25, even then, like just being stagnant at $25, according to Goldman Sachs, by the end of 2024, we'll see a 15% return. I'll take that. I would be very happy about that. This article says Goldman Sachs Group forecasts a 15% return on commodities in 2024, driven by anticipated rate cuts from the central banks in the U.S. and Europe. We already saw Switzerland last week drop their cut their rates. So this is really happening. It is happening, and it's going to happen. The article says this optimistic outlook is supported by a recovery in manufacturing and persistent geopolitical risks. Key commodities expect to benefit, including copper, aluminum, gold, silver, oil. However, Goldman Sachs analysts, including Samantha Dart and Duane Striver, advise selectively among investors as not all commodities will see uniform gains. Okay, well now that's making me a little discouraged because I was excited about 15%. Now they're saying be careful. It says rate cuts will boost key commodities. The U.S. Federal Reserve and the European Central Bank's signals towards reducing borrowing costs as inflation wanes are central to this bullish outlook. Goldman Sachs notes that U.S. rate cuts in non-recessionary environments historically lead to higher commodity prices. Well, yes, and that's what we're all looking for. We're looking to repeat history, and we're looking to see that higher commodity prices will show as this year plays out with these cuts. The article says especially this happens for metals like copper, gold, silver, crude oil. The bank's analysis suggests that the positive impact on prices tends to amplify over time as the growth impulse from looser financial conditions permeates the economy. This view is echoed by other market observers, including Markier Group, and then it lists a couple of groups that also see this. So it's not just Goldman Sachs, and I'll take that. I think with the stretch of time that we've been living with this stagnant, hovering between $22 and $24, now around $25. It's been like 2 years that we've been at this point. I would be really excited to see a 15% return. Right? I know I'm not supposed to use words like return because we're silver stackers. We don't think of this as an investment. I understand that, but really, this is a lot of money that I put in. It's a lot of money that we all put in to stacking this silver. And yes, it's for worst case scenario. Some of it is for barter. I look at junk silver for barter, but really, I'd like to see, just as we're seeing an increase in gold, I of course would be very excited to see an increase in silver. 15% would be nice after 2 years of a long, stagnant, really boring silver. I'd be really excited and pleased to see if Goldman Sachs is correct and we get a solid return. 15% would make me have a big smile on my face for sure. And for that, it keeps me still going all in on stacking silver. And pleased to see if Goldman Sachs is correct and we get a solid return. 15% would make me have a big smile on my face for sure. And for that, it keeps